Good day, students. Continuing our previous discussion on input tax credit, where we left off, the three heads under which input tax credit can be availed, namely inputs, capital goods, input services. Now, where is this input, where is this capital goods, and where is this services coming from? Anything that is procured by a business will not automatically become eligible for input tax credit. It has to be put through these three filters. If it is going to be a goods, it has to be checked whether the goods are an input to that business or it is a capital goods for that business. And when it is a service, it could be any service that is received, but it still has to qualify as an input service. Only if a purchase, that is an inward supply, is classifiable under input, capital goods or input services, either one of this, then only we can avail ITC. Now it is imperative to know what is the definition of input, what is the definition of capital goods, what is the definition of input services. The definition per se is very simple as compared to the S2L Senvat credit rules, where we used to have lengthy definitions. The definitions are simple. When they are simple, that much more should be our understanding beyond the definition to decipher the unsaid things in the definition. Let me start with capital goods definition. What is capital goods? There are three parts to the definition. Anything or any goods that is capitalized in the books of account. So if I capitalize in my books of account, then only it will qualify as capital goods. So my accounting treatment decides whether something is capital goods or not. The second part of the definition goes on saying that it is used or intended to be used. For what purpose? That is answered in the third part of the definition, which says in the course or furtherance of my business. So combinedly, what is capital goods? Three parts. Any goods which are capitalized in the books of accounts, which are used or intended to be used in the course or furtherance of my business. If all the three are together satisfied, I can call it as capital goods. So what is my capital goods has been specifically defined under GST, CGST Act, Section 2. When we move further, what is then inputs? Now this definition is easy as well as interesting. It starts off by saying, here also we find the same three parts. The first part says, any goods other than capital goods. So now this becomes something like a complementary set. If it is not capital goods, it can become inputs. But that is only the first part of the condition. The second part of the definition says, which is used or intended to be used. And for what purpose? In the course or furtherance of business. So the second and third conditions would seem very similar to what we have seen in case of capital goods. So the intention of the government is, if you are going to use for the purpose of your business or you are already using it for the purpose of your business, I will give you input tax credit. So if it is a goods, it can be either capital goods or it can be either an input. If it is capitalized, capital goods. If it is not capitalized, I can call it as input, provided the second and third conditions are satisfied. Namely, it is used in the course or furtherance of business, whether it is currently used or intended to be used in the future also. So thus, that is the roundup of goods related ITC on inputs and capital goods. Now, what is the definition of input service? Even more simpler. Any service. That is how the definition starts. It says any service. And what is the next condition? The next condition is used or intended to be used. Sounds very similar what we have seen earlier. And the third part is in the course or furtherance of business. That's all. So now, any service which is used or intended to be used in the course or furtherance of my business, I can call it as input service. Now going back to our original discussion, can I take input tax credit of anything that is coming into my books of accounts as inward supply? No. We will have to run it through these three filters. We'll have to check whether it is an input or a capital goods or an input service. If it qualifies under any one of this, then take ITC. If it doesn't qualify under any one of these three, you cannot take ITC. Now, where is my restriction? The restriction for availing ITC is in section 17, blocked input tax credit. Whatever is mentioned in section 17, we can never avail input tax credit. Now then, what is section 16, which is the first section which is talking about input tax credit? Section 16 talks about the eligibility criteria for availing input tax credit. So let's shift our focus to eligibilities. What is the eligibility for me to avail input tax credit? The first and foremost thing is I must be in possession of an invoice or a debit note or any other document which is approved by GST. Invoice is a common document. In other words, we call it as tax invoice. Rule 36 is the corresponding rule to section 16, where we may have to go and find out what are all those critical documents with which only I can avail input tax credit. The first document, as I told you, is tax invoice. But carefully note that the tax invoice should be raised by the supplier, which is received by the recipient. I can avail input tax credit. Now the second document based upon which I can take input tax credit is also a tax invoice. But the difference between the first tax invoice and the second tax invoice is the second tax invoice which they have mentioned is raised under section 31 subsection 3 clause F. What is that? That is, when you are receiving goods or services from an unregistered person, the person who is a registered person and receiving those goods, he is the one who is supposed to raise a tax invoice. In other words, we can simply call it as a self-invoice. So if the tax invoice is given by a third party to me, I can avail input tax credit. Where it is received from an unregistered person, goods or services, I am supposed to raise a self-invoice and I can take input tax credit. Is it that easy? Can I take input tax credit immediately? Subject to condition. What is that condition? The condition is subject to payment of tax. So in case of a third party tax invoice, I can take input tax credit even without paying him. I can take input tax credit because I might have a credit period. But in case of self-invoice, when I raise on myself, I must pay the GST, then only I can take input tax credit. Is it after making the payment I can take input tax credit? No, it is not mentioned as after making payment. It is mentioned as subject to payment of tax, which means I become eligible, but I become eligible moment I pay in the old period itself. Second document, that is self-invoice. The third document with which I can take input tax credit is debit note. Quickly, for the purpose of GST, we have to know that it is not an accounting debit note that we are talking about here. GST's debit note has got a different view. Who can raise a debit note under GST? Only the supplier. That is what section 34 says. The supplier can only raise a debit note. And what for a debit note can be raised by a supplier? It is to increase the taxable value or to increase the tax value. None of the other scenarios he can raise a debit note. Now, because of this debit note, my tax liability would have increased. If my tax liability is increasing, that is, as a recipient, I have to pay the tax to you. As a supplier, you will collect it from me and pay it to the department. That is equivalent to a tax that I have paid on my goods that are purchased or service that is procured. So I become eligible to take input tax credit on this document also. It could be an invoice, it could be a self-invoice, it could be a debit note for an inward supply. The fourth document is completely away from all the three. We go to customs. When I am importing goods, customs department asks me to pay customs duty. Like we discussed in the earlier session, that what is an IGST that is paid under customs is also considered as an input tax credit for the purpose of GST. So the IGST that I pay under customs, I can avail it as input tax credit. But where is the proof that I have made the payment of tax? Very simple. Customs department will issue a document called as bill of entry. That bill of entry is the proof that I have made the payment of IGST to the customs department. Now that also becomes the basic document based upon which I can avail input tax credit. So the fourth document based upon which I can avail input tax credit is the customs bill of entry or any similar documents issued by customs. For example, customs is asking me to pay the tax by way of a TR6 challan. That is the proof that I have made the payment of tax. I can avail input tax credit based upon TR6 challan. The fifth document, the last document based upon which I can avail input tax credit is an input service distributor's invoice. Who is this input service distributor? Common services related input credits can be accumulated by any part of an entity. For example, typically it will be a head office. there will be 7 branches across India. The head office is in, let's say, Tamil Nadu. There is a factory also in Tamil Nadu. 6 other factories are located across India in various states. The common expenses related invoice will come only to the head office. Now, can that input tax credit be fully taken in Tamil Nadu itself? If you do it, then you are denying Tamil Nadu government to the extent revenue. Then what should I do? The benefit of this expense is common across all your entities. Then you must distribute the credit also. How do I distribute? You should get registered as an input service distributor. That input service distributor will distribute the credit by way of raising a input service distributor invoice. Through that also we can take input tax credit. So only these 5 documents are mentioned as documents which are eligible for taking input tax credit under GST. So a combined reading of section 16 with rule 36 will give us the view that these 5 documents only I can take input tax credit on. Quickly, the remaining eligibility conditions in section 16. The next important condition is you must have received the goods or services. Then only you can avail input tax credit. So the invoice date might be 31st of March. I would have received the goods on 2nd of April. When can I take input tax credit? You can take input tax credit only in the month of April, because invoice date doesn't matter, when you received matters. In case of goods or services, I can take ITC only when I receive the goods or services. If I receive the goods or services in lots, this will typically happen in case of goods. I am receiving 10 tons of coal, but it is coming in 5 different shipments, 2 tons each. When can I take ITC for the 10 tons? You can take the ITC only on receipt of the last lot. When the 10th ton is reaching you, that is when you can take the ITC from the first ton till the last ton. You cannot take proportionately. You can take only on the receipt of the last lot. The other conditions which are there for availing input tax credit is, if I am taking input tax credit on a tax invoice issued by my supplier, I must have made the payment within 180 days. Within 180 days from when? From the date of the invoice that is given by my supplier. My supplier gives me an invoice on 1st of January 2018. I must have paid the taxable value plus the tax value by 180 days from 1st of January 2018. If I do not pay, then what happens? On 181st day, you are supposed to show the ITC availed as output tax liability and pay it to the department. And what's worse, you are liable to do that with interest. Okay, I have done that in the month of June. 1st of January invoice has crossed 180 days. I have not made the payment. For the month of June, when I am reporting in July, I am paying the ITC availed to the department with interest. But subsequently, in the next year, December, 2019 December, I am making the payment to my supplier. Rule 37 comes to your rescue. It says, good, if you are making the payment, subsequently, still you are eligible to take input tax credit. The date on which you made the payment. I am not making the full payment, I am making only the partial payment. To the extent of the partial payment, corresponding ITC can be availed by you. So there is no time limit for availing this input tax credit, because this is one unique provision called reclaiming the ITC. You have availed the ITC earlier, but you had reversed because you have not paid the supplier within 180 days. You are reclaiming the ITC any subsequent time when you make the payment. You are entitled to claim without any time restriction. The next 2 parts of the restrictions are, whatever tax that I claim as ITC should have been actually paid to the department. So how do I ensure that my supplier has paid the tax? That is in the hands of the recipient. You pay the tax to your supplier should have remitted it to the government. Then only your ITC is correct. The next condition pertaining to same kind of compliance is, you are entitled to take input tax credit only when you are filing your returns. When I am not filing a return, I am not becoming entitled to take input tax credit. So for the month of February, I am filing the return on 18th of March. 18th of March only I become entitled for input tax credit. So only when you file returns under section 39, you become entitled to take input tax credit. The last eligibility criteria for availing input tax credit is timelines. Within what time I can avail input tax credit? Before we get into this part, I want to talk about two things. In input tax, generally people get mixed up with two words. What is availment of ITC? What is utilization of ITC? The availment of ITC is like depositing the money in the bank. The utilization of ITC is like withdrawing the money and using it for your expenses. Now bear this analogy in mind and approach now the concept in GST. I can avail input tax credit, but for availment of input tax credit, there is a time limit. I can utilize the availed input tax credit anytime, there is no time limit. So what is the time limit for availment of input tax credit? The section 16, subsection 4 talks about 2 dates. It says the time limit for availing input tax credit is the due date for filing of return for the month of September, which is following the end of the financial year. Let me put some dates so that it will be easy to understand. For the financial year 2017-18, the September that is following the end of the financial year is September 2018. Till which time I can avail input tax credit? The due date of filing of return for the month of September, which is following the end of the financial year, which means ideally 20th of October 2018. Is it the only date? No. Or the date of filing of annual return, whichever is earlier. Under GST, section 44 of GST, CGST Act says that every assessee must file an annual return. The due date for filing annual return is 31st of December of the following financial year. Let us take the same example of 17-18 financial year. What is the due date for filing annual return? 31st of December 2018. Now, if you had closely watched, the provision said due date for filing of return for the month of September following the financial year or date of filing of annual return. It didn't say due date of filing of annual return. Because if it said due date of filing of annual return, it means always that will be late. But it says the date of filing of annual return. Assessee, in his enthusiasm, goes and files the annual return for the period 17-18 financial year in May 2018 itself. Then, beyond May 2018, he cannot avail input tax credit because it is whichever is earlier. Originally, he might be eligible up to September 2018's due date. But since you have filed the annual return earlier, this becomes earlier. You can never avail input tax credit after the date of filing of annual return. This is the most critical eligibility condition under section 16. So quickly to wrap up, we have seen the eligibility criteria for availing input tax credit. The first one being document based, which is which document makes me eligible to take input tax credit. The second one being when you make the payment, you can take the input tax credit within 180 days we saw. And then the third one being, can I take input tax credit whenever I have the documents? That is, I receive the invoice, can I take input tax credit? No, you can take only when you receive the goods or services. And then we saw about the timelines. Finally, we also saw about when it is received in multiple consignments, lots. When can I take ITC? I can take only on receipt of the last installment. And two other things that we saw. My ITC becomes eligible only when my supplier pays the tax, and I become entitled for ITC only when I file the return. Bear these eligibility conditions in your mind. Whenever we read about GST, section 16 is the section to look out for. The relevant rules also is rule 36 and rule 37, important for understanding the eligibility criteria.